You ever wondered why super smart people sometimes make surprisingly stupid decisions? In this video, we'll explore the mind behind those choices and cover common mistakes we can all make and learn how to achieve true success in life and business. Are you noticing that inflation is rising? We're seeing a significant increase in prices. The curious thing is that people seem to be accepting it quite well. For example, in home construction, the cost to build is rising a lot, both for new builders and for our operation of prefabricated homes, which is the largest in the country. We are indeed making a lot of homes, but costs are skyrocketing. The price of steel goes up every day, and it hasn't stabilized yet. Wages are also increasing. If you're buying steel, no matter where, you're going to pay more every day. So, the economy is on fire. We didn't expect this. When our companies thought they could get back to functioning after several shutdowns, they encountered many difficulties. We had to close furniture stores for a few weeks or more. When we reopened, we had no idea what it was going to be like. We couldn't stop people from buying, but we also couldn't deliver anything. The situation was accepted because no one could deliver either, and the waits increased for months. We thought things would improve when the stimulus payments stopped, but that isn't happening. I receive information every week, call to check how things are going, and keep track of the day-to-day of 3 stores in Chicago, Kansas City, and Dallas. And the situation isn't changing. People have money and are paying more. When carpet prices go up in 1 or 2 months, they soon announce the increase. Our costs are rising, and the supply chains are confusing for everyone. It's almost madness, but in some areas, it's even impossible to buy international airfare. Money is being diverted in parts of the economy and, in a way, everyone has more cash in their pockets now. But at the same time, it's a pretty complicated situation for a significant number of people. Look, about that suit. I haven't worn one in almost a year, which is a sign that the dry cleaner must be struggling. No one is taking suits for dry cleaning, or even white shirts. The place my wife usually goes to, which is a small business, suffered because they had no delivery or pickup. But the stores that adapted to offer this type of service, like the Queen, ended up selling more. However, it can't be said that we're in an economy that cares much about prices. I don't know exactly how this reflects in the price indexes, but inflation is happening, way more than people would have expected about 6 months ago. There's a really smart guy who thinks that this is risky and is just the beginning. Inflation is going to impact everyone. It's possible that we'll face gradual inflation, and the policies being followed in the country to stimulate businesses are going to have inflationary consequences. The truth is that while we're borrowing money from the rest of the world, it would be much smarter for politicians in the future to decide that they would prefer to pay back that money in dollars that are worth less than when they borrowed it. It's the classic way to reduce the impact of foreign debt, and we are accumulating a lot of foreign debt. I always think about when politicians talk about using taxpayer money to do this or that, as if the taxpayers were actually paying. In reality, we haven't raised any taxes around here. Taxpayers continue to pay the same they've always paid. Just to give you an idea, federal revenues this year are around $2.6 trillion, and they used to reach $2.7 trillion. In other words, we are taking less money from taxpayers. The people who will actually bear the consequences of all this are those who buy fixed income investments, many of which are from the US government, and will realize that their purchasing power will be much lower when they cash in those investments. You could even say that the AIG bonuses are being paid, in part, by the Chinese because of the loss of purchasing power they will have with US government bonds. But I'd rather say that taxpayers are paying instead of just blaming the Chinese. It's a curious situation. I see comments all the time about how taxpayers are doing this and that. And my taxes haven't increased, nor have yours. Taxpayers haven't paid anything so far, and my guess is that, in the end, the cost of much of this will be paid through the reduction of the real value of fixed income investments in the future. And that seems like the easiest thing to do, so it's very likely to happen. So expect to see a lot of inflation. Now, the best way to protect yourself from inflation is to have your own earning power. If you're a great teacher, surgeon, or lawyer, you'll get a slice of what other people are producing. It doesn't matter what the currency is. So your earning power is by far the best way to protect yourself. If you're the best at what you do, no matter the profession, you will secure your share in the economy. In the national context, regardless of currency value, it's always measured against some standard. The second best form of protection is having a big business. If you have a strong brand like Coca-Cola, for example, you're going to secure a part of people's work, both today and in 20 or 50 years in the future, because people won't hesitate to give up a small effort for something they like. These are the big assets, your own earning power, first, and then the potential of an exceptional business that doesn't require intense capital investment. If you need that type of investment, you'll feel the impact of inflation. With that in mind, the best investment you can make is in yourself. Young people should strive to become neurosurgeons or invest in businesses like Coca-Cola, instead of just focusing on government bonds. If you look at interest rates currently, stocks are very, very cheap. The relevant question is what the rates will do over time. But there are already forecasts for interest rates based on the yield curve up to 30 years. It's a fascinating period, as we've never seen such a large injection of capital into the economy while interest rates remain practically at zero. It's wonderful. But always remember in the economy that you can never focus on just one thing. Always ask, and then. We're sending enormous amounts. The president mentioned that 85% of people will receive a $1,000 check. A few years ago, we were saying that 40% could never save $500. So now, we have 85% receiving those amounts. So far, we haven't seen negative consequences from it. On the contrary, those who receive the money feel better. Those who are lending might not be as happy. But this boosts stock prices and makes the economy flourish, pleasing the voters. It's interesting to watch how this unfolds. Unless it causes more problems, it's likely that this strive will continue. But there are always economic consequences for every action. And that's why companies like Google and Apple are so valuable. We don't own those companies, but they're incredible in terms of return on capital. They don't need much investment, but generate a lot of money. When we look for bonds that pay more than government ones, we find options that, depending on short-term rates, yield significant returns. That pressures the economy. And that's exactly what monetary authorities are looking for. They're applying pressure. And in Europe, that pressure is even more intense. We are helping with fiscal policies. People are feeling good and becoming desensitized to large figures. For many, trillions seem to have no meaning. Well, $500 are relevant. Let's see where all this leads us. I think we're living in a fascinating economic moment, without a doubt. And the professional economists, of course, have been surprised by what has happened. I remember what Churchill said about Clement Attlee. He was a very modest man and had many reasons to be. This sums up well what has happened to many economists. They were so confident and discovered that the world is more complex than they thought. Keynes already said that inflation is a hidden tax that only 1 in a million understands. It's a tax on those who trusted in the currencies issued by the government. The best defense, the best investment against inflation is to improve your own earning power and develop your skills. Few people maximize their talents, and if you can manage to do that, you will have valuable protection against a currency that can quickly devalue. The best passive investment, in my view, is in a good business. If you have a stake in a solid business, you are likely to maintain your purchasing power, no matter what happens to the currency. It's curious that in the United States, the value of the dollar has fallen by 94% since my birth, reducing it to 6 cents. Inflation is a cruel tax for those who believe in stable currency assets. But even in times of inflation, things can go well. If someone had told me at birth that a dollar bill would only be worth 6 cents, I would probably have said, "No, thank you very much. I'm not interested in living in that world." But in reality, things have gone well. Therefore, I have nothing to complain about. Investing in yourself is the best decision you can make. Anything that enhances your skills, no one can take that away from you. There may be enormous deficits, and the dollar may devalue, but if you have talents and maximize them, you will have an invaluable asset. This doesn't mean that everyone should go to college, but any way you find to improve your communication skills is crucial. I myself took a Dale Carnegie course that cost the equivalent of a college degree. I always advise students, seek work that you would love to do even if you didn't need the money. Don't go through life like zombies waiting for the future. You should find something you genuinely love to do. It may be that you don't find this right away in your first job, but don't give up looking. Mistakes will happen, that's for sure. You don't want to make mistakes in big decisions, such as whom you choose to marry. Similarly, I can't avoid making mistakes in business and investment decisions. I try to minimize them, but I don't dwell on them. I don't look back. The biggest mistakes we often make are the ones that don't become visible, the mistakes of omission rather than commission. I never lost so much money on a specific investment, but I have missed out on billions in opportunities that I knew I should have taken. For example, not investing in Microsoft in the past isn't something I consider a missed opportunity because I didn't have enough knowledge to make that choice. But there have been various situations where I knew what I should have done and, for one reason or another, didn't take action or invested on a small scale. While I was sucking my thumb, I should have been writing checks. These mistakes don't show up in reports. There's no place that shows missed opportunities, but I recognize that I have missed some. The triumphs in life are, in part, more significant because we know that not everything will be a success. I would never allow myself to become obsessed with mistakes. I know many people who dwell on them, and it's simply not worth it. Tomorrow is a new day, and the important thing is to move forward. The nature of my work requires an independent way of thinking. If I only conducted research, I would end up doing what everyone else does, which is generally not helpful in investing. So I need an environment and temperament that allows me to think autonomously. I have an amazing partner, Charlie Munger, who is extremely intelligent and top-notch in everything he does. We think quite similarly and talk from time to time, but not frequently, as we already understand each other's way of thinking. Charlie has taught me a lot. If I need to gather a group to make decisions, it probably shouldn't be me leading it. I don't mind having that responsibility, but I prefer not to submit it to a group because I've seen that in many situations, the larger the decision-making group, the more homogeneous opinions become, and I don't believe large committees can make brilliant investment decisions. I see IQ and talent as a representation of engine power. However, the efficiency of the engine depends on rationality. Many people start with 400 horsepower engines but only manage to extract 100. It's much more effective to have a 200 horsepower engine and achieve the full output. So why do smart people make choices that hinder their ability to achieve satisfactory results? It relates to habits, character, and temperament. It all comes down to acting rationally and avoiding distractions. As I've mentioned, everyone here has the capacity to do what I do and even much more. Those who can't are held back, not because the world lacks opportunities. The important thing is to associate with people you would like to become, that will naturally lead you in that direction. The most significant person in that aspect is your spouse, and I can't emphasize how crucial that is. The friends you choose have shaped your life. Make good friends and maintain relationships with those you admire, as well as like. I believe I should focus on making money only with what I truly understand. And when I talk about understanding, I don't mean knowing what a specific product is about, but understanding how the business will fare economically over the next 10 or 20 years. I know, for example, what Wrigley, the gum manufacturer, will look like in a decade. The internet won't change how people chew gum or which brands they choose. If you master the gum market and own brands like Double Mint, Spearmint, and Juicy Fruit, you can be sure they will be available in 10 years. I can't predict Wrigley's exact numbers, but I certainly won't be too far off if I look ahead in such a sector. Evaluating this company is within my circle of competence. I understand how it operates, its finances, and the competitive aspects of the business. Understanding the economic consequences of a business is different from assuming that a given industry will be successful. When I analyze tech or internet businesses, I recognize their grandeur and potential. I enjoy exploring computers and shopping on Amazon, but I can't say who will win the competition. If I don't know who will come out on top, I have no interest in investing. I'll just serve as a consumer. Defining your circle of competence is one of the most important aspects of investing. It's not about how broad it is. You don't need to master everything, but you should know the limits of that circle. What you know and what you don't know, and stay within it. Tom Watson Sr., the founder of IBM, wrote in his book, "I'm not a genius, but I know a few things and I stay on them." That's the secret. If I recognize some areas I understand and focus on them, I will succeed. If I don't understand something, but let myself be carried away by the excitement of the moment or the pressure from peers, jumping on a new investment wave, I'm just putting myself at risk, and I deserve the consequences. Once, I met Bob Woodward right after the release of All the President's Men. He was starting to make a fortune at 30. And we had breakfast at the Madison Hotel. He asked me, what should I do with this money? And I replied, investing is basically giving yourself the right narrative. I said, imagine that Ben Bradley revealed the value of the Washington Post company this morning. What would you do? You'd go out and interview TV brokers, newspaper owners, and evaluate every asset. I showed him that this is what I do. I give myself the right narrative, and it's not more complicated than that. Now, there are some stories I really can't tell. For example, if you ask me to write something about the value of a glamorous business that isn't profitable, I would be lost. However, if you ask me for a story about Potomac Electric Power, for example, I can easily develop that narrative. This has been my canvas for over 50 years. I can create whatever I want and don't have to follow what Wall Street tells me to do every quarter. I hold the brush and the canvas is limitless. This is an incredible game, and I have the privilege of playing it every day with people I cherish. I don't need to associate with those who repulse me. I always say that when you reach 65 or 70 years old, if you have people who truly love you, you are a successful person. I've never seen anyone reach that age, and I'm not talking about someone in extreme poverty or pain, who has many people around them that love them and is unhappy. I know very wealthy people, 86 years old, and still I can't see anyone 70 years or older who doesn't feel good about their children and at the same time feels bad about the life they've led. In my experience, I've seen many people with great wealth, and often family relationships don't do well. They may not feel good about their children or vice versa, regardless of economic circumstances. I've never met someone who feels their life was a failure, even if they have faced significant challenges. On the other hand, I met a man who was extremely wealthy and put a lot of money in his children's names but didn't want them to have control over it. Every year, he would gather them for a dinner and try to convince them to sign his tax return blank. This is insane. He manipulated the situation, and his children knew exactly what was going on. For any parent, treating children like objects of control is just madness. By doing that, he was essentially saying he didn't trust them enough to understand what they had. This phenomenon often repeats itself. When people achieve success, I often see what, in many cases, turns into personal failure. The experience of capital management over the long term is fascinating. Think of some notable figures like John Meriwether, Eric Rosenfeld, Larry Hillenbrand, Greg Hawkins, Victor Hag, and the 2 Nobel Prize winners, Merton and Scholes. These men probably have an average IQ as high as any group of people working at a company in the United States, including Microsoft or any other you might want to mention. The amount of intellect in that room is impressive. Now, if we add to that the vast experience they had in their field of operation, it becomes even more interesting. They weren't people who suddenly entered the financial market without prior knowledge. They collectively had an average of 350 to 400 years of experience directly related to their work. Another crucial factor is that most of them had nearly all their wealth tied up in the business. This means their own money, hundreds of millions of dollars, was at stake. They rely on super high intellect, work in a field they know deeply, and still ended up going bankrupt. To me, that's absolutely fascinating. These stories reflect the complexity of business and personal relationships. It's a reminder that often, external success does not correlate with true happiness or satisfaction. If I ever write a book, I would call it Why Smart People Do Stupid Things. My partner suggests it should be autobiographical, but that could serve as an intriguing illustration. These are perfectly decent people whom I respect and who helped me during tough times, like when I faced problems with Solomon. They are not bad in any way. However, in order to gain more than they really had or needed, they risked what they considered important, and that is foolishness. That's all it is, foolishness. No matter what your IQ is, if you risk something valuable for something that holds no relevance, it simply doesn't make sense. One lesson I didn't realize when I left school is how much the average person actually stands out. And this isn't because they have IQs of 200, but because of the way they behave. The energy they bring, the commitment they have, the quality of their work, and how they treat those around them, all of that matters. You will stand out much more than you can imagine if you take this into account. One of the skills you should develop, like it or not, is oratory. This is a competence that will last 50 or 60 years, and it is a responsibility. If you don't enjoy doing it and feel uncomfortable, that will continue to be a problem for a long time. However, oratory is an essential skill. Many of the competencies you need are human skills. If you can bring out the best in the people around you, that is a rare talent and does not relate to intelligence. This talent is more associated with your attitude towards the world and other people. If you strive to develop this from an early age and are truly conscious of it, you won't need to outsmart others in intelligence or anything else. What you should seek is to draw out the best in the people around you, and that skill will bring great dividends throughout your life. Did you like the content? If so, don't forget to like, subscribe to the channel, and hit the bell to not miss any new videos. Share your experiences in the comments, and let's discover together how we can avoid stupid mistakes and reach our true potential.